And joining me now from New York with an outlook on stimulus and much more from an investor's perspective is Doug Dachille, the co-founder and CEO of First Principles Capital, former managing director and head of proprietary trading at J.P. Morgan. Doug, good to see you. Thanks for joining us here on Taking Stock. And I want to ask you about stimulus and about the Fed. Let's start with the Fed first, if I could. What do you make of the minutes that came out today in this discussion, this beginning of a discussion? The Fed's going to try and shrink its balance sheet, start getting rid, perhaps, of some of those mortgage-backed securities on its balance sheet.
Well, it's very interesting because what the minutes said was somewhat controversial relative to what actually the chairman of the Federal Reserve said in a testimony. Actually, recently in a testimony, he actually said that he would limit sales. He would actually, as a second phase, contemplate sales after a tightening mode to see how the economy responds to tightening, and then he would consider sales. So it's very interesting to see in those minutes that there was great debate over the timing and when to sell, as opposed to what was recently said by the chairman of the Federal Reserve with respect to a much greater resistance to selling assets now and actually going down the route of tightening rates and using the short-term rates as opposed to using asset sales. I think that was very interesting.
And what do you make? Are you listening more to the Fed chairman, or are you listening more to these minutes?
Well, I think what's interesting about it is what it tells you is that this is all unprecedented. The Federal Reserve has no experience with what type of impact asset sales would have on the economy relative to their experience that they've had managing short-term rates with respect to the economy. The problem they face, however, is how much will they have to move short-term rates if they continue to preserve the stimulus effects of holding on to these mortgages? What's interesting is the Federal Reserve, for the first time, has additional and highly powerful tools that they never had before that I'm sure Chairman Greenspan would have loved to have in the past. The ability not just to manipulate short-term rates and have impact on the economy, but the ability to impact long-term rates and mortgage spreads, which may, in fact, be far more powerful mechanisms of managing monetary policy and controlling the economy than ever you can with the blunt instrument of managing the short-term rate.
Doug, there's a lot of fear here in Washington about what will happen when the Fed perhaps starts to sell some of these mortgage-backed securities. Again, what do you think would happen if they start to do that? Could the markets handle that? Would it be all right?
Well, I mean, let's understand something. The reason they bought these mortgages was to actually get the rates likely to a level that the equilibrium prices would not sustain absent their participation. So it shouldn't take, significant amounts of rocket science to analyze the fact that mortgage rates will go up, mortgage spreads will widen, because they have actually supported it to a level between Fannie Mae, Freddie Mac, and the Federal Reserve. Almost 50% of the mortgage market, of the agency mortgage market, is owned by those entities. So if you have a 25% of the mortgage market controlled by the Federal Reserve and they begin to sell, needless to say, many of the private investors are thinking that they're riding on the back of the Federal Reserve and buying these at these levels that may not make fully economic sense in the absence of the Federal Reserve. So we know that those mortgage rates would highly likely go up in the event they started to sell, which may be perfectly fine. What they need to do is to actually assess whether the economy is robust enough to actually begin the process of selling. And I think that instrument is far more powerful to assess how robust the economy is than moving the short-term rate, which is a very blunt instrument and takes a long time to actually see the effects on both sides, lowering the rate and raising the rate.
All right, Doug Dachille, I can't get into stimulus with you, can't get into Fannie and Freddie because we're out of time, but as always, we appreciate it. Be certain to have you back.